Hi. Those of you who have attended others of these events will know me. Others are like, who's that guy? I'm the president of NYPAY. It's a labor of love that several of us have worked on for many, many years. And we love to do events where you walk away smarter or knowing something you didn't know before. And this is certainly one of those. One of the benefits of this sort of thing is you meet a lot of really, really cool people. And that is certainly the case now. And I'm very thankful for those who've agreed to join this discussion. It will be a lot of fun. This is a nascent topic. I've said to some people it's not even baby steps, it's kind of prenatal, but you might disagree that it's a little further along than that. But it's very early. It will have an effect on anybody who touches the payments world. Thus, I think it's a great time to have a good discussion about it. So the way it's going to work is I'll pitch it over uh, uh, let's put to pitch it over to James. But before that, a couple of housekeeping things. Please take yourself off camera so we can focus on those who are presenting and moderating. Um, and questions are welcome. Put them in the chat. We will take them in line on time as they come aboard. I think it's always better, and I think I know we all agree. Uh, ask them in context. At the end of the event, we will have a few breakout sessions. So, depending on how many people are able to stick around, we'll have two or three groups of folks, five or six people, who are speaking to some of the panelists. So, you get a chance to talk one on one, which is a little bit more difficult with a big participation. And we're NYPAY. Go to nypay.org. We do events once a month, 60, 70% online, and the other percent in person in New York. So, with that, I won't blather anymore. I'll pitch this over to James Wester, who moderates like nobody else. And y'all enjoy, have fun, feel free to ask questions, and we'll see you at the end of the discussion.
Thank you, David. I hope moderating like no one else is a good thing. Uh, thank you. I do appreciate it. Yeah, tonight we're going to talk about agentic commerce, which is one of those phrases that is pretty much everywhere right now. And I think it's still somehow a little slippery, depending upon who you ask. It's either the next big thing in commerce, or as David said, it's prenatal. At a basic level, I think what we're talking about with agentic commerce is software acting on your behalf. So not just making a recommendation or telling you what you might want to do, but actually making those decisions, executing transactions, managing the outcomes with the constraints that you put in there, but basically being you. So that sounds big, but it also, I think, raises a lot of really big questions. You know, who's going to own the customer relationship? What happens when something inevitably goes wrong? Where's liability land? And I think maybe most importantly is who's going to be the first mover in this, in the payment ecosystem? We're famously slow, highly regulated, a little skeptical in this space. So who's going to actually take the lead? So the goal tonight, not really going to look at trying to declare any winners or losers. I don't think. Maybe somebody will try to predict a winner or a loser. And I don't think we're really looking for any magic timeline, but I think what we really want to do is talk about what's real, what's plausible, what needs to be true from a technical, from a commercial, from a regulatory standpoint for all of this to scale. So we've got a really good group of panelists. I'll ask them to introduce themselves here in a little bit. They all have a different vantage point from the merchant side to the processor side to the regulatory side. But as David said, this is meant to be a discussion. So please weigh in. I would ask my panelists the same thing, have conversations amongst yourselves. But this is not supposed to be me talking or interviewing anyone. It's supposed to be a conversation. So jump in, react, challenge our assumptions. And with that, I'll get started. I'll introduce myself first. I am James Wester. I'm the research director, co-head of payments research at Javelin Strategy and Research. I've been an analyst in this space for, I think, 150 years. That's what it feels like some days. And there's always something in that 150 years that I'm learning every day. And one of the great joys of my jobs, I get to have conversations with really smart people. So I will throw it over to those really smart people, Chloe, Arvind, and Steve. Why don't we start with you, Chloe, and let you introduce yourself?
Thanks, James. Hi, everyone. Thanks for joining. My name's Chloe Dulcinea. I am the Principal Managing Director of Bantro Advisors. focused on regulatory strategy. My background is tried and true nerd. What that actually means over time is I went to law school and everything focused around banking, payments, and the infrastructure around what innovation looks like when you combine all of that together. So I did some time at Davis Polk and Wardwell, a very large law firm, in the white collar crime space. I also went to the Office of the Comptroller of the Currency. It was a return trip after I interned there almost 10 years ago now at this point. And much of my work at the agency was focused around AI, starting and launching the AI task force, multiple initiatives around machine learning, training examiners, training co-counsels and different colleagues, and doing a lot of negotiations and looking at the third-party risk management considerations, model risk management controls, and advising on whether or not something is um, enough of a concern where one would get hives and start thinking about whether or not there needs to be some form of enforcement action, discussions with boards and leaders, or mediation. So it's a really good time, and I'm really enjoying what I'm doing now, helping fintechs and startups and banks know who should we partner with to not get dinged, and how do we build with compliance. And to your question, James, I would say who stands out in this space, innovation decides what's possible, but what I've seen over the past few years is that governance really does determine what's scalable. So that's where my bet is to your question.
Excellent. Love it. All right. Arvind, how about you?
Thanks, James. Hey, everyone. I'm a global payments and a fintech operator been working for last 20 plus years across networks, issuers, processors, and fintechs. Most recently, I was heading embedded finance and installments product at Visa. Now I'm advising fintech founders and financial institutions, VCP firms, on a range of areas across product market fit, go-to-market strategy, and partnerships. Basically, really passionate about bridging the gap between the startup, innovation, and institutional ecosystem. So, working across the board with many players in the payments ecosystem and having fun doing that. I think what's drawn me personally to this topic of agentic commerce conversation is payment systems when we designed them like years ago were around a very specific assumption that a human made a decision at a moment in time, whether it's in store or online, and we can trace intent, identity, and liability all the way back to that action. I think agentic commerce challenges that assumption, and I think that's why this topic is super interesting and near and dear. So I'm really looking forward to it. I do agree with Chloe. I think governance is the biggest um, I guess the governance gap is the biggest adoption barrier for agentic commerce. And I think my personal take is I think networks do a great job as a trust layer. They've done a great job in payments, and I think they have a big role to play in playing a role of a governance mechanism for everyone in the ecosystem so this thing can scale. But thank you for having me over here, James, and excited to be on.
Excellent. All right. We're going to come back around to that governance question, especially with the networks. I think that's going to be something worth discussing. But let's start with or finish with having Steve introduce himself.
Thank you, James. Yeah, I'm Steve Cole. I'm the Director of Technology Engagement with the Merchant Advisory Group. Merchant Advisory Group is a trade association made up of some of your favorite merchants in the country, some of the biggest merchants in the country and the world. And our focus is on payments. Prior to joining the MAG, I spent many years in an acquirer, FIS, when it bought WorldPay before that, and before that, and on and on and on. I was in payments when nobody actually intentionally got into payments. They just sort of fell into it. And, payments is one of those things. Once you're in, getting out is sort of like the mafia. You just never leave. But I'm really excited about this. And I do agree with Arvind that one of the most fascinating parts about this, and probably the thing I think is the biggest change, we've had a lot of change. Payments is changing all the time. But the thing that really stands apart with this is this agent that now sits between a merchant and a customer. And what does that mean? what does that mean for a merchant when I'm no longer directly interacting with a human? I'm now interacting with software that we hope is faithfully representing a human that we actually know who that is. So that's the part of this that I think is the most intriguing.
So that's interesting. First off, I that makes me laugh. The idea that nobody got into payments, intentionally. It is funny. I've been in payments a long time, and I remember the first time somebody said, "Oh, payments, that's cool." I was like, "Wow, okay, payments is cool." But when other people started to recognize it, that was a little surprising. But I think within this topic of agentic commerce, it is cool. It is interesting. And so to what you were saying, Steve, one of the questions that let's start with a baseline. There is a lot of interest in agentic commerce. We are getting a lot of discussion. There's a ton of hype around it. Every briefing that we have with companies, somebody is going to ask the question, not about AI specifically, but about agentic commerce. So we'll kind of go in reverse order, Steve, Arvin, and then Chloe. My question is, how real do we think it is at this point? And what do we think is causing that interest or that hype?
Well, walking backward through your question, I think the hype is what's causing the interest.
Yeah.
I mean, the reality is there are solution providers out there that are diving into this space, and you don't make money in this space unless you get people interested in what you're doing. Not everything always works out, but if you don't generate that sense of urgency, that sense of FOMO, um, you're probably not going to make it real far. Um, I do think agentic commerce is kind of already here, because I don't look at it as it's either here or it's not here. There's a number of elements to an agentic transaction, from discovery to building a cart to checking out to post-transaction activities. And I think some of that's already happening with discovery and that aspect of it, building a cart. I think the thing that's going to be everybody hold your breath and hope nothing blows up is when we just cut agents loose to do everything on their own and hope everything goes well.
So that is one of the things that I know we're going to want to talk about here in a little bit because nobody in payments ever does anything with hope. We're not allowed to do that. But Arvin, curious what you're thinking as far as how real do you think it is at this point? And I like that idea by the way, or the thought there, Steve, that the hype is what's causing the interest. Arvin, kind of curious what
I,
you think in terms of
I,
the
I'm
reality.
I think sort of aligned with what Steve just said. I think agentic commerce is already here. I mean, it's real. It's one of those things in my mind is like, there's a saying, future is here, it's just uneven, right? So if you look at agents today are doing discovery, they can do comparison shopping, they can even plan. So a lot of the top of the funnel of shopping, if you will, agents are already doing, and everyone is using it and loving it. I think even early forms of delegated execution, putting tight guardrails, some of the pilots are already there. I mean, I've bought stuff on OpenAI with Etsy merchants, and I think its experience is super cool. I mean, there's still human in the loop for those transactions which are running on ACP protocol, but it's already here, right? So I think what there is hype, and I think hype is coming a bit from this convergence of two forces. Number one, I think AI systems are finally good enough to act, right?
Hmm.
They're just not good to recommend, they're actually good enough to act on your behalf. And then number two is a lot of these commerce APIs and the payments infrastructure is mature enough to orchestrate these transactions. So, I mean, there's excitement because you have these two possibilities. And of course, the challenge is also because the biggest problems lie between the gap of these two converging forces. You still have a trust problem, you have an identity problem, and all that. But it is exciting, both technology as well as maturity in terms of how the agents can act on a behalf is better than ever before. And I think that's driving a lot of hype.
So, Chloe, I'm going to ask you the same question, but another question I will add on top is not only how much or how real do you think this is? You know, how much of this is hype and how much is not? But I would also go ask the question, how real do regulators believe it is? Because I have a feeling that's an important part of the equation too, is if they think there is something that must be done before it actually becomes a reality or more real, that they need to act. So I'm curious what their opinions are or what you think the regulatory side is saying.
Yeah, man, happy to talk about it. So, one other thing I'll add is just from, former regulator, some of the things that we would look at is, we don't want to necessarily regulate an industry to complete failure. Like you still want an industry to an ecosystem to exist, get the guardrails, figure out what governance looks like, and find that right balance where, you aren't completely, blowing the candle out before anything gets a fair shake. So it's a really like interesting tightrope to walk. And much of what's happening now leads back to the question of, does this help or hurt? Stickiness is a big concern right now in a lot of these different sectors. They're trying to figure out how do we make sure that we get these customers to buy our stuff, to trust our programs, to stay within our ecosystems. And Agentic has a big potential magic bullet if it's done the right way. So I think that there's a lot of, waiting and seeing for what this can really emerge to. Because right now we have a really, really, really fast car that we're excited is getting built, and we're trying to think about, oh, wait, seatbelts, brakes. Do we need rules of the road? Do we want it 15 miles per hour, 30 miles per hour? But it's not to say that the fast car shouldn't exist, you know? So as far as what to look out for from a regulatory component, both at the state and federal, I think some agencies and regulators are having a bit of a firmer posture because of the concern of a complete void or lack of any guidance whatsoever, especially compared to the past 5 or 6 years where we got a better idea of what implementation looks like for some of the earlier, TPRM guidance and things like that. Um, but yeah, I think the area that I've seen a lot of builders and folks kind of hang back from a little bit too much is that regulators are asking for feedback right now. Like there's an RFI that's supposed to be closing next week with the OCC related to like core service providers and for community banks. That's just one example of like how active they are getting with opening up these like conversations for different areas of the law, different rules, different regs, and really wanting to get feedback and input from industry. And it didn't happen often. And when it happens, it's not just to check the box. Like they really mean it. They really do want industry to give some insight on how things function because there's very few folks that would actually be doing this from day to day to day with build out and know what the implications are for the rules that they're actively looking to write right now. So they're watching, but they're not just watching and waiting, they're watching and writing. And there are some opportunities to be able to have high signal moments where it can help inform regulators on what some of the pain points are or what some of the considerations should be as they're actively rewriting some of the rules or adding more rules to what's already on the books to reflect what's going on with agentic.
So I want to come back around to that because I want to talk a little bit deeper about regulations. But one of the things that I kind of am curious about here is we talk a lot about agentic, and you were talking, Steve, about, when we let the agents just kind of run amok. I mean, one of the big use cases or applications that makes the most sense to me when I've talked to people about what agentic can do. So, Arvin, you were talking about discovery, the things that you can do already with AI. And then the next step of just letting it go. So the one to me that makes most sense is hospitality, where I want. We were talking earlier before this started about the snow and everything. So I've got a kid in college. I want to be able to get that kid home, but that will require a bus trip to an airport and a flight, and then maybe a hotel, or if anything happens because of weather or whatever, I want to be able to do all that. That makes a ton of sense to me because I can give an agent the ability, the criteria to make all of those decisions for me. Say, here's how I want to pay. Maybe it's a particular airline with loyalty and rewards points. So I want to be able to pay with all of that. And that's not stuff that my brain does very well. It just doesn't. I don't keep track of all that. So I want something that can actually do that, get the best deal, best time, know that everything is going to be done right, and it's for my child, so I want to make sure that it's perfect. I don't want any friction. That's a great use case to me. That makes sense. But once you kind of get past that one, I have a harder time looking at applications and use cases. I'll throw it to the panel. Where do we see sort of the low-hanging fruit from an application or use case in terms of what these agents, what agentic commerce will be doing? You know, that because then I think that will give us a better idea of what industries will be paying the most attention, where they will actually be, building those tools. I'm looking for compelling use cases and applications here.
It's interesting. I'd actually circle back to your first use case of the whole travel scenario, because I think one of the things is you're going to have to give that agent a lot of information to make sure it does what you want it to
Yep.
do. So to the extent that you're saying, well, my brain doesn't do that well, if your brain doesn't do it well, the agent's not going to do any better than the information your brain gives that agent. So if you give it vague guidance, you may not end up with what you're actually looking for, but it'll meet the guidance you gave it. So
Right.
I do think, and again, it does still come back to that cutting them loose and just letting them go. I mean, if it comes back to you and goes, here's what I built for you, and you go, oh, holy cow, you got them an Uber, not a bus. I wanted a bus. You put them in first class. I wanted, premium economy or whatever. So I do think the making sure that you're giving the agent exactly what you want is going to be a big deal because it's going to come down to intent, right? What did you intend to do?
So
And
that's the agent actually training me over time more than me training the agent, right?
well, we would hope so, right? We'd hope the agent would we'd hope the agent would go, oh, you said this, but what did you actually mean?
Right.
Versus it just takes what you did, it does it wrong, and then next time, well, maybe it does it better.
I think just to build on that, I see it like maybe in phases, like where most easy use cases today are would be where you're doing rebooking. So this is a great example of what Steve just brought up, right? Any new thinking means that you have to delegate some of your authority or thinking to the agent, which would be harder. But in the immediate, I think travel rebooking could be done. You could do renewals because the intent is clear in those use cases, constraints are known, and exceptions, if they are, they're quite manageable. I think where it's going to evolve is which is more exciting, is delegated authority, right? So still not fully autonomous, but you start to get comfortable. Hey, you can do X up to Y dollars with Z merchants under these conditions, right? I think that's where it starts to touch the edges of a lot of the stuff which has to be figured out. Um, Having said that, I still don't think, I know people say subscriptions, and I still can't see why an agent is needed for my card on file transaction, especially on subscription. Like Netflix subscriptions work fine. Uber card on file, I'm not gonna tell anything. I mean, these are scenarios where payment is so invisible that agent is no value add. I think where payment is more of a friction and there's a lot of thinking or budgeting is involved or maximizing loyalty points is involved. So some intelligence is involved. I think those are probably the use cases where it'll take off.
So then across that, so if you think about that, you guys put in a couple of, one, Arvin, you said, you didn't see a use for it in a particular use case, or Steve talking about where things are going to be done from an application. And I guess one of the big questions I have is thinking about all of those solutions, where do they come from? And by that, I mean, if I am that airline and I know that I want a frictionless purchase for a person, especially they're buying it for another person, that AI agent or that agent acting on behalf of a customer makes a whole lot of sense. So I could see an airline saying, let's build that in right away. But then is that going to be then driven by their acquiring partner, or is that going to be something that the networks are going to step in, or is it something that consumers are going to demand? And so it's going to be from the issuing side. So I guess the question I'm thinking of here is who moves first? Who actually says, this is something I need as a merchant, as a consumer, as an issuer, as a network? this is a solution, this is an application, this is a problem that can be solved, who's going to be the first mover? My personal feeling is it's going to have to involve the networks at some point to say, we're setting a rule. In fact, I just saw Dave True just wrote something about having those governance and economic models, but something even simpler, which is just that identity. I am a person who is a card holder. You need to be able to have something that tokenizes that identity that I will put there and say, that is me. I am actually authorizing that. So I would say that that's what I'm throwing out there as probably one of the very first movers they're going to have to be. But I'm curious to the panelists, Steve, Arvin, Chloe, who moves first that says this is something that we are going to build and it's going to become a useful tool that we're all going to use?
I would just say, well, as we know in payments, like a lot of innovation, most innovations in payments doesn't like it doesn't move all at once. So it kind
Right.
of cascades. And having been part of the two-sided network challenges, I think I think merchant eventually is needed. Merchants and seller side platforms are needed to move first or have some excitement to believe that the other side is actually going to jump in. Um, but I think it happens when the networks have kind of proven the guardrails, the infrastructure exists. And I think that started to happen, right? So like all major networks in the US today have their own sort of orchestration layers, own programs, and own set of APIs that they have rolled out with a bunch of partners, which actually is great because it's bringing in the seller side platforms like acquirers and their end merchants, but also bringing these agents, agentic platforms, which are needed to initiate these transactions. But going back to your point, I think, James, what is critical is that someone has to do the start, and I think networks already did with they're kind of the trust layers in the ecosystem. They've kind of have been busy building the infrastructure, but collaboration is key. I mean, and you need to collaborate with everyone, but ultimately, again, if there's no excitement with the merchant, it's very hard to
Yeah.
pull the bandwagon.
Yeah.
And
Although, well, Steve, why don't I know you wanted to talk about the merchant side. Why don't I throw it back over to you and I will just add this question on there about the merchant. The agent is going to have to have that tool will have to have some sort of incremental benefit to a merchant for them to say, this is something we want to participate in. But it also now says, yes, I am going to provide you as a merchant that incremental benefit, bigger say, a bigger cart, bigger sale, more frequent, more loyalty, but doesn't it also disintermediate that merchant if I as a consumer care about things like cheaper? May not be you as the merchant. That agent's now making different decisions, and I'm not necessarily, and maybe that you can program that agent to really, really, really like a particular merchant, but that's a different calculus for that merchant, correct?
absolutely. And I would start out with the basic rate is that for a merchant, unless it's something their customers are asking for, it's not going to be real high on the development priority list unless there is a big benefit to the merchant that doesn't negatively impact their customers. And a lot, I think, of the experimenting going on with merchants is to ensure that they're not getting that disintermediation that you're talking about, that they maintain the relationship of their customer. Because if they don't maintain that relationship and they just become a fulfillment center, then to your point, it's just a race to the bottom in pricing.
Right.
So that I think is a primary concern for merchants is maintaining the relationship with their customers. Um, I don't. I know there are merchants that are experimenting in this field and putting stuff in place, but I think it's also stuff they would be willing to pull back very quickly if they didn't see the true value for them and their customers. And when Arvin, you talk about what the networks are putting into place, I agree they are getting out there and doing that, but this is untested stuff, right? It's like Mike Tyson says, everybody's got a plan until they get punched in the face. And I don't think any of this has gotten punched in the face yet to see how it's going to stand up when things don't go right. right?
So that's
Everything's
the
very happy path right now.
right. And that then becomes, Chloe, I haven't forgotten about you because this next one goes right to you, which is what happens when I get punched in the face as a consumer.
Uh,
Consumers that get punched in the face, the first place they go to is a regulator to say, to stretch this metaphor completely, I've just been punched in the face. I need to be made whole. So the question then becomes to what, Steve's absolutely right. This is all happy path. This is the great stuff that's going to happen. We know something is going to inevitably break. To what I said earlier, we in payments have to operate with the understanding that risk mitigation is built in. That's what we do. And risk mitigation is based on the idea of compliance. We have to comply with certain things that make sure that that risk is being mitigated. So, what happens when things go wrong? What role is the regulator going to play in this to say, you're on the hook, you have to make one or both sides whole? And you had said we're kind of talking through that now, but is it still too early for even regulators to have their heads sort of wrapped around what's going to happen?
I think just the practical way to think about it is the black box thinking is not going to fly anymore. So while everyone's actively building, and there's folks of different sizes, right? Like maybe there's not a bunch of resources you could throw at having like 100 compliance people partnering with innovators and developers in a product build phase. I get that. But even having at least one or two controls to have a defensible workflow for the decisions that are made, knowing that the statute of limitations is years and there could be a look back for what the decisions were made for, where, like, who holds the bag when a customer brings has a question, or they're just pissed off and the regulators finally get more staffing to be able to deal with the influx if and when something blows up. So a bunch of the practical takeaways that I'm telling folks is being able to have a defensible workflow and have some type of practical protocol and implementation that makes sense, that's traceable to actual standards and best practices, where I get it, there's not really much to go off of right now, but there are some North Star examples across different related industries that could be a really good basis to say that there was at least some sense of thinking behind, determining where things end up in the chain. I had some matters that involved a lot of UDAP cases and, sitting in the room, we're looking at the outputs and like let's look at the inputs as well as the outputs for what determined how this machine learning model and this automated decision making framework got to those results. And my goodness, night and day. So really being able to sit and look at what does it look like and have an explainability factor for what you're doing when you build out your models is going to be critical. And that's not an if, when, hypothetical 6 years from now scenario. The regulators have been trained on this for the past 4.5 years at the shortest period of time, probably longer. But actual examiners at both state and federal, states are talking to each other and building out a network to be able to really think about what they need to look out for. And when there's not much guidance right now, because the federal level is too busy saying, don't worry about anything at all. We're going to put a halt on all those rules that are coming out right when Texas just put out their AI Act. Like it's a little messy right now. But to build out some resilience in agentic, like just really have that stuff listed out. Have your memorialized workflow. Think about who has what and be able to trace it back to a basis based on like rules and law. And
So
it's one
I
or two
want
people on the
to,
team. Like, yeah.
so I want to recognize one of the questions over here. So by the way, if you're listening and you want to ask questions, please do, because I do want to get to some of them because there's a great question here. And it actually kind of goes back to there's a part of it actually that seems regulatory, which is about the models and how things are done. And Steve, it goes back to what you were talking about in terms of who owns that relationship. So Bill asked a question, how do we ensure that agentic AI making purchasing decisions on behalf of a consumer is not biased towards specific merchants, networks, or partners due to commercial arrangements, training data, or embedded incentives? Incentives is one that I think is really interesting. And how would we detect and correct that bias over time? Now, I would add to that, Or would we? Is that just something that we know is going to be a part of Agentic, which is there will be those arrangements. There will be something that says, hey, agent A, if you buy from merchant B, discounts might be here. There may be a business model in there. That might not be something that regulators want to allow. That may be something that we don't like. But I think that's a really fascinating question. I'll throw it to you, Steve, first, because I think it really does hit at that relationship between the merchant and the consumer is, the merchant is going to have their AI, the consumer will have their AI. How do we know that there's not going to be something that's going to be driving those decisions that may be actually acting against what we as the consumer empowering that agent to do something want to have done?
Well, personally, Steve Cole talking, I think it is going to happen.
Right.
That is going to happen. And that's going to be part of the evolution of this ecosystem. I don't think again, we're not going to build all this in advance, have it all figured out, launch it, and everything's going to work. It's probably going to be pretty messy. You know, does there at some point this evolution of agentic marketing that merchants do? What's the profile of these agents, and can I actively market to them to draw them in? Now, to the other question about arrangements and stuff, are those arrangements above board and fair, or is anyone using market power to uh, stack the deck? I think there's a lot of questions in there that no one's answered, and all merchants are concerned about how that does get addressed. And I don't think anything that's been put forth up to this point totally addresses Bill's question.
Yeah, I mean that does sort of fit under that unknown unknowns. Chloe,
Yeah,
you have something.
just to chime in a little bit too, agreeing completely with what Steve said. A lot of folks might have the feeling that because it might not be perfect and you can't 100% guarantee that maybe it's not worth moving forward and coming out with something that could benefit consumers to have less friction, to have move with confidence, and to feel like it's making people's lives easier and there's an ability to just make things faster and more seamless. It's not so much, that fear shouldn't drive a lack of innovation. I think it's more so the ongoing monitoring that I've seen a lot of institutions really falter or just kind of overlook over time and get a little bit complacent with. So for everyone that's tuning in, even if the onboarding is seamless, even if the partnerships go through and you have a certain number of really awesome transactions with really great customers and low, complaints, just continue to have a really thoughtful program for what ongoing monitoring looks like because it's not going to be an if, it's a when. And being able to have early detection measures and show what happens when things go wrong, that's going to be what really determines what coming out the other end looks like. The sweeping it under the rug, waiting to see if someone else has something just as worse come out the week after you get like it's just not going to necessarily help when the regulators are already kind of having a lot of tension between state and federal level, and it can just complicate things further if there's a wait and see approach. Just
One of the
easier to own the
things,
mistake.
you know, Chloe, one of the things that makes me think about too is so in this environment, right, when something goes wrong, it's typically something that's got to be solved between the merchant and the customer. Other parties get involved in that, but essentially that's what it came down to, right? Those are the two parties involved. And I actually wonder if the frameworks are considering the fact that when you put these agents in, that kind of, I'll call it a two-party model, doesn't really work anymore. And now, should we look at it as a three-party model where, hey, maybe it's not on the consumer, it's not on the merchant, it's on the agent. And what do we do when it's on the agent?
I think it's
Yep.
also a matter of looking at things like transaction by transaction, but taking a step back, um, keeping track of what the saturation is, like if this is happening, dozens of times or hundreds or thousands of times, that's kind of when it becomes a, systemic consideration for the build. Sorry.
just to add to that, I think there's a lot to learn. And, I feel a lot of this is going to evolve because if you look at the pilots that are happening today, at scale, it's always human in the loop. So a complete autonomous use case, I haven't seen one at scale. It's mostly pilots, and people are going to learn the breaking points and all. And I guess regulations will catch up and eventually will probably drive some of that. But I think what I've seen personally, where most scalable players in this ecosystem, whether it's OpenAI, Visa, or Stripe as a processor, they're trying to put agentic commerce inside the existing liability
Yeah.
and identity and all the regulatory framework. Because the risk is if you too quickly define a completely new liability structure, identity structure, regulatory structure, which doesn't even exist today right now for Agentic, you're just gonna you're just gonna kill this thing without learning anything. So I think it's like one of those things like how online commerce grew. It started with how in-store payments worked, and we took that as a baseline and we defined the rules around authorization, authentication, liability framework, disputes. And I think that's what's happening. At least if you look at what networks are doing, they're using existing tokenization rails, existing liability frameworks. Merchant is the merchant on record. There is no, they're preserving that, which is super important to give control to the merchant to decide whether they want to accept or decline a transaction, right? So some of this to me is headed exactly in how payments work today, and we've seen this evolution from in-store to online and online to mobile. And I'm sure like a lot of this thing is going to be learned along the way. To Steve's point, there are, I guess, more blurriness. There's more blurriness in how the intent is governed and how the action happens, and there are many breaking points around dispute frameworks and all. But so far, what I've seen is, um, if you look at the immediate pilots which are scaling, the authority that you're giving to an agent is very narrowly scoped. It's time boxed. It's scoped to a purpose that you want the agent to do something with the specific merchant. So, and it's using the token rails, right? So that gives me at least some confidence that this is going to be a crawl, walk, and run. And of course, the hype always go to fly. Like we are in that fourth stage of thinking everything is going to just go tomorrow. I think it's going to be a few years out before we have completely autonomous agents.
Yeah, and I think it's going to be lumpy too. I mean, when you think about like that, I think that's a great parallel between the way e-commerce came up and then mobile commerce, and now we're looking at this. And the first easier use cases were digital distribution or digital items. Those things where, okay, there was something that we've got to make a consumer whole. It was just a digital download. So it's not something, I'm not shipping something out of a warehouse. We're getting that back is going to be costly. So that made a lot of sense. And I get a sense that's probably the way we are going to start seeing that stuff happen with Agentic, which is the lower risk is going to be the thing that we are more willing to throw an agent at or as a merchant accept a purchase from an agent because it's not going to hurt us that much. Making us whole is not going to be a big thing. But there was a question that I've scrolled past it, but I believe the question was, um, can a merchant even know at this point that it's an agent? Or if the agent is coming through an agent provider like there's a PayPal or a Firefox, are they gonna even know that? And I think that's an interesting question because at that point, you really are beginning to get more and more distant from the consumer and more distant from the merchant. So at some point, do we just have agents talking to agents and there's really no decision by either the merchant to cater to a consumer or the consumer to even go for a particular agent? That sets up a really strange dynamic in terms of shopping because at that point, there's not a human on either side. It's just all algorithms on both sides making decisions. And doesn't that fundamentally change shopping? Doesn't it just fundamentally change commerce at that point?
Yeah, I mean, I agree with your statements. And I think one of the things that is going to play out over time is that what consumers want?
Right,
Do they
exactly.
want to not shop anymore? Are they actually just going to go, I'm just going to turn this over and let, the agent do it. And I think that's a comment Arvin made earlier. There's certain types of transactions you're probably not going to ever want to just turn that over. I mean, if you really want to look at a product and think about it, mull it over, I don't think you're just going to give it the specs and hope it goes and
Right.
gets you that exact thing that you're looking for. But there are use cases where it's just, there's not a whole lot of value add for the consumer to be, that engaged in it. Um, so I do think it depends, but absolutely, I think merchants have a concern that, you know, there are, parties in all of this that are going to try and push agents into everything they can do. And as far as the question about does a merchant even know that it's an agent, I think it kind of is going to depend on the model. There's different models out there on how agents are deployed, but merchants have been, sniffing out bots for a long time now, right? That have been trying to get onto their sites. So they have some capabilities to do it. I think the question comes, what are the bad bots and what are the good agents?
Yeah.
Now it's not just block everything. It's like, oh, wait, there might be some of these we want to let in. And I think that's where it's going to get complex.
I think also there are, again, these protocols are evolving. So we have to just kind of see how this plays out. But there are requirements right now in all the major protocols and programs. Like I know for Visa, like agents have to register. So you just can't be an agent and start sending transactions to a merchant. You have to register with the network or with a party. So there's someone you're actually registering it who's taking ownership of sharing that trusted agent. And then I think they're also trying to cryptographically link the bind the intent with the payment, so merchant has a higher degree of confidence and their trusted agent protocols and whatnot. I think it's a big risk, and that's why it needs to be solved. And that's why I think a lot of focus right now in the protocols is how do we make sure that merchant doesn't see this as a bot and actually
Yeah.
see this as a trusted agent, and what needs to be done to give that comfort to the merchant to accept the transaction as legit.
Yeah.
And I think it's interesting actually too, because you could even see it saying, even if it is a trusted agent, one of the things that I find really interesting, going back to what we were talking about with Steve in terms of the relationship between the merchant and the consumer, is that's okay if the merchant sees it as an agent. It's a different set of criteria that merchant may have to cater to, which brings to mind the idea of having an entire, I guess you would call it marketing towards what an agent is going to want versus what I'm going to want. So if I want to buy a pair of shoes when I walk into a running store and I know that I want to maybe change the type of shoe that I run, maybe it's a different type of shoe that I'm interested in versus I know I like it, I know I want it, I just want the cheapest one. And I'm going to send my agent to do it. Those are two totally different, same client, same customer, but two totally different buying scenarios. And online, maybe that shoe store is going to say, well, it's James. We really want to cater to, color, style, running, whereas it's the agent is just cheapest. We'll market to the agent differently. I find that to be a very strange thing to think that we are going to have to, within retail, create entire new marketing and sales structures just to go after those agents that are going to have criteria that I, as a consumer, may or may program into it. I interrupted you, I think, Chloe. I think you were going to say
Oh,
something
you're
as well
good.
on.
I guess one way that I think about it and speak with folks in the industry about it is that we're moving from clicks to commitments, and what that looks like when it's not just an individual flashpoint in time, but a longer term commitment and arrangement between the customer and with the ecosystem. So regardless of what the protocol says, and how things evolve over time, there will be some governance and some insight for what the expectations are for, those who would actually come around and enforce what looks like a bad setup in a system versus a good setup. So I guess just the best way for a practical pointer is for folks to just really think about what it would look like if someone asks you 5 or 6 years from now, why did you not have a way to be able to validate whether or not an agent was the thing on the other side versus a human? The trust layer builds and the focus on the trust infrastructure and trust technology. I'm seeing some really cool tech come out right now that I'm thinking, wow, 5 to 10 years ago, this would have really helped some folks out. Um, and I'm glad that a lot of the conversation is centered around those fintechs and technology providers, because once that's pretty developed and refined and polished, it's going to help folks move with more confidence to be able to have a defensible workflow. It goes back to what we started with in the beginning of our conversation. There's really interesting tech out there. There's really interesting use cases, but governance is going to be the thing that determines who's able to scale and stay resilient.
I'm going to steal that clicks to commitment line, by the way. I hope that's okay.
It's
That's a
okay.
really good way of looking at it. I like that. I'm conscious of time. We've got about 10 minutes left. A couple of questions have popped up. One of them that I think is interesting because I don't have an opinion on it. The question is, can the panel please opine on Microsoft's Copilot checkout? Seems like they're already driving agent buying. I have not tried it. Does anybody have an opinion on that? I would be curious to know who's actually been experimenting or building with that.
with Copilot.
All right. So that's a good question. That's one to actually put in my back pocket and look at from the analyst standpoint. Steve Mott wrote something which I think is really interesting. Would love to get some opinions on this. His comment was networks might take ownership of agents, but no one's taking liabilities, especially Stripe. That falls on the merchants. It's the same mistake we made with e-commerce, which is absolutely true. When we let the networks and tech providers create the rules of the road and then dictate the infrastructure. And I do think that was one of the big issues. Curious your take on that, Steve. You're already, I can see, composing a response.
Yep, just about to jump out of my chair on that one. It actually goes back to something that Arvin had said earlier that does give me pause. When we earlier talked about, is there now this third party that an agent, we got to build it for that. And Arvin said, that would create obviously a hurdle, so we need to try and put it into the existing infrastructure. Well, the existing way things work in an e-commerce transaction, the burden of proof is on the merchant. So now we're going to say, okay, agentic commerce, burden of proof is on the merchant. If we put it back in that same thing. And I think that's Steve's point, is all we're going to do is just take something that is detrimental to merchants and we're just going to pile more stuff on it. So I would definitely have a concern of just using today's rules to operate tomorrow's commerce.
I do think that these rules will evolve, is my take personally. I mean, there's like many things we've seen in payments. Day one rules are needed to as a launch pad. And I think my sense is that when these get all formalized, these protocols get formalized, standards get formalized by EMV Co, we may actually have a different day two. Like on day one, I feel like I think it would be very complicated to take off with a whole new set of rules and frameworks when it's so unproven right now. Like a lot of this stuff is like still being figured out. So I guess most folks probably thought like, okay, we do have identity framework, liability frameworks. Let's use that and protect the existing regs. But yeah, I mean, over time, I agree with Steve. I think this might evolve. But the good news is also that we could have had a very different conversation if there were completely new set of rules which were not favorable to one of the parties. Then it would have, it creates more complexity, I guess, in early days. But just to point one thing which the person asked, I think we there is like a lot of these a lot of the networks and even infrastructure provider, I think there's a lot of investments being done to help merchant side of the ecosystem. Because on the issuing side, issuers are still on the token platform, so they already have the visibility because these are all tokenized transactions. I think there's a burden of proof on the seller side that the ecosystem has to evolve and get ready. So that work is being done. Of course, the liability and identity framework stays the same, is my understanding. I mean, I'm not a spokesman for any company, but I see that's probably the rationale.
So there is a question then. Dolly, I will not try to pronounce your last name. I'm afraid I'll butcher that. But really interesting question about what are the roles, or when you were just talking about the issuer's role in this space. And I do think that's kind of interesting because how do you remain top of wallet when there's no wallet because there's no person? It's all based on what? And I think that's an interesting question for the issuers to solve. I mean, if you are an issuer and you have a large rewards, loyalty, whatever link with a particular card, clearly that would matter. So if I have an American Airlines card and I want to buy a ticket and I know I want to use my loyalty and membership points as well as maximize those points by using that card, you could see an issuer saying, "Hey, we want to be able to deal with that. We want to take that into consideration." But what else I mean, is there any other role that issuers will have other than just being, we have to be linked to a purchase via a token or identity? Is there more that they will be able to do?
Well, issuer manages credit risk, so they can decide which agent they're okay with to put
Yep.
the token, right? So I think issuer still has a huge control and burden of responsibility. But I think you're that this point on like issuer losing the top of wallet, frankly, that's happening even within the world of wallets, right? Like if in Apple Pay today, I mean they already lost that race, right? So inside, um, but they do have controls. They do get to say which agent token they provision.
Right. And I think that's going to be an interesting issue that issuers are going to have to deal with is how they are going to do that across an entire card portfolio. Um, and with that, we have 3 minutes left, so I will throw this open. Actually, no, let me do it this way. We'll go Steve, Arvin, and then Chloe. Crystal ball. 60 seconds to tell everybody on here this is what's going to happen in Agentic Commerce. How long is this going to take?
Well, I mean, we're obviously already on the road. I think reality is we're probably going to be in the ditch a couple of times. There'll probably be some smoldering heaps of failure. Um, but I don't think it's just going to go away. I mean, it's going to continue to evolve. I don't know that it becomes the thing, we just turn our lives over to it. Back to what Arvin said. I think there are just some experiences and some shopping that consumers want to do on their own. So it'll be another channel, but I don't think it's going to become the channel.
I would say this more in the phases. Like to think of like in phase one where we already are. It's still going to be human in the loop. You will have um, simple use cases, narrow set of authority scope to authorize these agents, and then that probably is going to be like another 12 to 18 months. And then after that, and I'm talking in scale, right? So in phase two, probably the scale is going to be you start to broaden the delegation, you enhance your controls, you improve issuer visibility because a lot of the use cases would be more new and on the edges.
Yeah.
And then phase three, which is completely autonomous, which we spend a lot of time talking here, I think it's like probably 2 years out, like fully autonomous, because that would need us to solve for trust, economics, governance, right? And I think the pace of how fast we move across these three stages is not just the technology. I think it's where the trust would fail. Like, so we would need to have enough governance to have enough trust to evolve and grow in this thing. So it's going to take time.
Yeah,
All
so
right.
I'll echo that. I think that timeline is what checks out, and then adding at the tail end the potential enforcement actions. Tipping will probably happen, probably a year or two after the cake is baked. But it's not going to be everyone. Don't get the scaries. It's just going to be able to say, this is what good looks like, this is what great looks like, and this is what needs a little bit more improvement looks like. But once that clarity happens, like that's the whole life cycle, right? So things should be pretty established by then.
Nope, you're all wrong. Sorry. Skynet will be taking over in 18 months. We will all be batteries in the Matrix. Thank you very much. This has been a delightful discussion. I've really enjoyed it. David, I'm going to throw it back to you. to manage the next stage. But just want to say thank you to the panelists and thanks, David, for having me on. This has been very fun.
Well, I can hardly agree. It's great because this is fun because we're not talking about something that's baked and what the impacts are, but we're talking
Yeah.
about something that, as I said, is really early stages. We don't know. So for those of you who can stay on,
That's David's
we
way of saying what we're actually predicting is unfalsifiable, which is the best kind of prediction.
well, I mean, Iron put it a good way, or somebody put it, and Steve put it a good way, I guess. I would say cluster whatever,
Yeah.
but there will be more than one of those before this gets worked out. But anyway, hang out if you can. We'll be breaking to small groups. You'll get a chance to talk directly to someone involved in this. And if you can't hang out, just follow NYPAY. This is the kind of stuff we love to do, and it only works when we have good participation.